Welcome to David and David on Real Estate. Join us as we explore the ins and outs of the real estate market.
Good morning, everybody, and welcome to the David and David on Real Estate podcast. We are in episode number 74, and we have a very exciting and possibly a bit controversial episode today because we're going to be talking about the outlook in 2023. Drum roll, please. So many different topics to discuss, but David, I think given where the market's going and given the conditions out there, and given the fact that everybody in our industry is looking at all these statistics, analyzing these numbers, talking to buyers and sellers, and there's a lot of fear out there. So I think it's a timely topic that I'm looking forward to diving into.
Yeah, and when you suggested this topic and what we're going to discuss, my immediate response was we got to call this "The Sky is Falling," and really we're going to discuss it. Is the sky falling, or does it just feel like it's falling? But there's always a silver lining. There's always an opportunity, but there's challenges, and this is a challenging market. So we got to get into it, and keep in mind, I think everybody knows we're the middle of January, right? And when we're in the middle of January in a year when the market is really hot and active, it's still relatively quiet. So we got to keep that in mind too, because January, every year we go through this. Oh my God, is there going to be a market in the spring? And February is still a little quiet. It starts to pick up. So we might see that, but there's so many factors right now in the marketplace keeping things down. So we don't know. So what do you do? What do you do as as an agent, as a broker, as a lawyer with a law firm with a bunch of staff and people that we want to keep employed, and nobody's as busy as we'd like to be?
Yeah, and I mean, that's a great question. As a business owner, do you take your foot off the gas? Do you put your foot on the gas? Do you increase your marketing budget? Do you go back to basics and then do all those things that got you to the place that you are today, that got you to be busy, to stay busy? And I think it's a combination of all those things. I think when you look at a business, you have to make sure that the funnel is full, but you also have to make sure that you control your expenditures as well, right? So, where are you spending your money? Obviously, salaries are so important right now, right? If you're not doing the volume, if you don't have that volume, then you have to control your salaries. You have to control your expenses. But at the same time, as a business owner, you have to be very mindful about, making sure that you're still sending the right message to the industry, that you're still trying to capture more market share, right? Because we know there's less transactions out there, but it's about capturing more market share so you can sustain the same activity you had last year or keep growing, right? And David, I'm a relatively new broker owner. I've been doing this for 6 years. I've spoken to some broker owners that have been around since the 80s, and they've experienced similar markets and the downturns at the end of 89 and 1990. And I've asked them, what were those times like, right? And the biggest thing that they said to me is they said, David, I'll throw two names at you. You might have heard of these two agents, Loretta Finney and Seth Magdaddy. And I said to him, yep, I pretty sure I've heard of those two names. And they told me that in 89, they increased their marketing budget. And that's when they captured the majority of the market share, right? Because nobody was spending money. Realtors were not trying to grow their business in 89. Everybody, contracted, and everybody reduced their spending, and everybody took their foot off the gas. But Sam Magdaddy and Loretta Finney, they hit the gas pedal big time, and they were able to capture a majority of the market share. And now they've built these two mega brands that are so hard to compete against, because how do you compete against, Sam Magdaddy's marketing budget? I mean, there's strategic ways you can, but it's very difficult if you don't have the resources to do that, right? The message has to be that you have to control your expenses. There's certain expenses that every business owner can look at their statements, their visa statements, and start trimming the fat. But at the same time, you have to be very mindful that you send the right message to the marketplace, and you invest your money in the right places so your business keeps growing.
No, and that's a fabulous message and fabulous example. And that's a great example of, having a challenge and turning it into an opportunity. And for those two agents, that launched them to a whole new level that they may not have otherwise achieved. Maybe they would have been motivated the same way, right? And that's the thing. And figuring out, exactly what buttons to push and where to spend the money is a challenge too. Like there's no magic formula necessarily, but to sit at home and say, I'm just going to wait for the market to turn around. Like, how are you going to feed your family? Because we don't know when that's going to be. Like if we thought it was a more a typical year and everybody's going to have more activity once we hit the spring and the warm weather, maybe, you'll get some more deals, but you can't, we don't know that that's going to happen this year. There's a lot of pressures, a lot of different market factors keeping things quieter. And it may not happen in March and April. And it might, maybe it'll happen by June or July. But we don't know. Nobody has that crystal ball. So what are you going to do in the meantime? So if you're planning to take a vacation January, okay, still, take a vacation. It's a good time to do that. But when you're in town, you still got to make a plan and figure out what to do, because you want to be ready and you want to be trying to get more than your normal market share, as opposed to just letting business come to you. Yes, you'll get clients who are going to say, yeah, okay, I'm ready to sell now. I'm ready to buy now. And you acted for me before. Can you act for me again? So that's all great, but we can't wait for that. We got to take some proactive steps now, at least think about it, try and figure out what to do. Because there are some transactions now. We are closing transactions. So do you want to be part of it, or are you going to wait for someone to come to you in May?
David, I think mindset is so important in these times, right? Do you get caught up in the negativity of everybody around you, right? And it's hard not to be negative. Oh, I love that cup. Can we see it again? Beautiful. Very cool. Mindset is so important, right? And look, you're going to get more negative mindset in these times than you will positive, right? And that's just the reality of the situation. There's people who get caught up in the fact that, hey, I haven't done a deal in 3 months, I haven't done a deal in 4 months, and then they have the media messaging them constantly, markets down, and they're throwing statistics like 40%, 45%, but how are they talking about price? Or are they talking about number of transactions, right? If they're talking about number of transactions, then they're talking about market share, right? And what's really happening out there, David, if you really analyze and talk to the buyers and sellers and the realtors out there, is right now there's a standoff. It's like a cowboy movie. And,
right.
I'm sitting on the sidelines and I'm seeing two parties, and literally they're both standing there and drawing big guns and pointing it at the other side, saying, nope, don't come near my house. And basically the story here is that sellers have made one of the biggest mistakes in their lives every single time they've sold real estate in the last 15 years. And the market kept showing them that time and again. You're going to sell your property, 3 months later, it's worth 40, 50, 60, $70,000 more.
Right.
Why did you sell your property?
Right. But you can't play that game.
Well, but I mean, that's the game that's being played right now, unfortunately, right? I completely agree with you. I mean, in every single type of market, it goes up and goes down, and there's a cycle to it, right? But we haven't seen the down cycle in the real estate market in 25 years. Right. So the sellers are basically saying, look, I'm not going to sell my house. I'm not going to lower the price by $200,000, $300,000, $400,000, because I know that, 3 months or 4 months or 5 months or a year from now, the value is going to continue to rise over and past the point that, I'm going to get today in this depressed market. Right. And I completely disagree with that viewpoint. I think, we're in a situation where the Bank of Canada needs to change the habits of the general population, right? Because people are spending money out there still. Like I went to a Leafs game last night, and David, thank you very much for the Leaf tickets. That was amazing of your office. But we went to Jack Astor's before the game, and boy, was it ever packed in there. It was, shoulder to shoulder. People were out, people were having a good time. That's difficult to see when interest rates are, at 4.25. There's an interest rate announcement coming. You look at the Bank of Canada's website, they're still pegging inflation at 6.3%. And people are out there spending money in full force. I wish they weren't. I wish they stayed home. I wish they made some other decisions, because, to get inflation down is going to take everybody to work together and to start, thinking about their finances and spending money a little bit differently.
Yeah, people still want inherently to make the same life choices, right? For the same reason, they bought their starter home and their plan was, 3 to 5 years in that home and then move up to the next one. They still want to do that. They still will do that. The question is when. And it's really hard to play the timing game and say, oh, I'm going to wait, because the market's I'm going to get a better deal if I wait till the spring, or I wait till the summer, or I wait till the fall. Like who knows? You have to go to the market that you're in and analyze the market that you're in, and then make your best choices and best decision. You talk about a standoff. We got a client now who actually bought first last fall with plenty of time to sell. So far has not sold. The closing date is now, like it's this week. And she's having a fight with her real estate agent over this, because the agent keeps giving her the right information. This is how much your house is worth now. This is how much you could sell for now. Well, and her answer, well, when we last spring, a year ago, it was supposed to be this much, and now it's a couple $100,000 less, and I'm just not prepared to sell it for that. And it's like, well, if you don't sell it, you don't have money to close your purchase. And you got your purchase at a better price too, because the market is down. If you would have bought that house last spring, you would have paid a lot more for it. And the client's just not getting it and just not accepting the advice. And I think the agent's done a good job showing all the comparables, what's out there, what the opportunities. It's been marketed, they've had other offers, and there's no offers anywhere near that number that she's got stuck in her head, which is a number that probably a neighbor got a year ago, right? But it's not there. Maybe it'll be there 6 months from now. Maybe it'll be there a year from now. Who knows? It may never be there. Well, at some point it will, because the values always go up eventually, but maybe it's 5 years from now. In the meantime, she's got a closing now. She needs the money now. And she wants to fire her agent and start with another agent. So what's the new agent going to tell her, once he gets there and analyzes the situation, right? Like the market's the market. But that's like an example of, you get into this standoff. And so instead of buying a new house, what she's actually doing is buying a lawsuit. We've already told her to retain a litigation lawyer because it's not going to close. The other side, wants to sell, and they're not prepared. They'll give her a week extension, and that's about it. Maybe 2 weeks but that's it. And it's not going to sell in that time frame, even if she accepts that price at this point. So now, instead of buying a house and selling a house, she's buying a lawsuit, and she's going to start giving retainers to a litigation lawyer. Like that's the standoff.
And unfortunately, that's the worst case scenario, right? I mean, debt is becoming more expensive. And there's a new reality setting in, and sellers have to accept this reality. And, if I take a look at the sellers and the buyers, ultimately the buyers are going to prevail, because, their monthly payments are going up. On $1 million, you're paying, over $6,000 a month on your mortgage payments. I mean, that's a lot of money for a lot of people to carry. And, yes, we've all been stress tested to carry those debt loans, but, it's the auxiliary expenses that nobody really looks at. What are your restaurant expenses? Do you have car loans? How many vacations do you go on per year? And you nailed the nail on the head when you said people don't want to change their spending habits, right? We're habitual people. right? And look, we just came out of the probably the most difficult 2-year period of our lifetime, right? COVID, where we were locked up, where we were restricted, where we couldn't travel, where we couldn't go out, where we couldn't socialize. And people want to go back to those things that they've lived with their whole lives. People want to go to those restaurants. I don't blame people for wanting to go out and eat and enjoy themselves. They should, right? But ultimately, if we're going to combat inflation, we have to do it as a society. There has to be, everybody has to do their parts, right? Like businesses, instead of raising prices nonstop to maintain their margins, we got to figure out, how do we lower prices? How do we lower prices and maintain margins? And that takes a lot of teamwork, because that means that your suppliers, my suppliers, they have to be on board with this strategy. We all have to come to the table and say, okay, we have to lower the prices. That's how we're going to fight inflation, is by, making sure that we have access to the same services and the same products, right? But they have to cost less across the board. And that's not easy. That's probably an impossible task, right? That's why the government's raising rates, making debt a lot more expensive. And ultimately, if buyers are not buying real estate at those prices, because not that they don't think it's worth it, or that they don't trust or believe in our real estate system, because I think that is stronger than ever, especially in a global scale. We talk about this all the time. But right now, it's coming to a basic factor, which is affordability. If buyers can't afford the bottom line, the monthly payment at the end of the day, then the prices have to come down so buyers can afford to make that purchasing decision. And we're seeing conditional offers all the time not fulfill the financing condition, right? Because even if you were pre-approved 3 months ago, you go back to your bank and say, hey, I found the house. Oh, but you were pre-approved at a much lower interest rate. Now interest rates are going up. Well, you got to change your pre-approval, and all of a sudden, you can't carry this property anymore.
Right. Right. No, and that's a serious factor, and that's certainly been impacting our ability to close. And some people have got stuck because they waived those conditions, thinking they've got the approval in hand, and it's not there. And and then people. There's so much of this in the media too, and stories in the media, and people hear stories and people think, okay, there's a lack of inventory. So one of the things that happens, because there's a lack of inventory out there, is on some properties, there are still competing offers.
There are, yes.
Right. And that drives the price up. So people still hear those stories, because those stories get sensationalized all the time. Saying, well, all I need is put my house in the market and need competing offers. Hey, agent, get me some competing offers. I'm going to drive my price up above my expectations because it happened to so-and-so down the street, or I heard happened to my cousin. They hear those stories, but that's not the norm in the marketplace like it was a year ago this time.
No,
on every property, there was it was a lack of inventory, but there was way more inventory, but we had competing offers all the time. So now there's a lot of properties that are on the market and they're just sitting there, and they're not getting offers, they're not getting showings. And I know you probably have the stats, but that stat for the time on market has gone up significantly over the last 6 months, right? But people, that's not a sexy story for a reporter to write about in the paper or to publish somewhere. So people don't hear about that as much. They hear about the one house that went on and all of a sudden in the middle of December, January, got competing offers and drove the price up. So sellers are thinking, well, why not me? That can happen to me, right? So that's their expectation, which is a false expectation. Like they shouldn't count on, they might get lucky, but they got to plan their finances and plan their transactions based on the fact that that's not happening.
Yeah, let me unpack that a little bit, David. So historically, the days on the market has always averaged around, 30, 34 days, right? For a detached house in the suburbs, in 905 suburbs. That number substantially dropped to like 5, 6, 7 days during COVID, just because there was, such a demand for our housing. Now we're seeing that number creep back up to about 42 days. I mean, it's still well within, the range of when you average it out over the last, 25 years, right? So
That's a norm. That's
that's the
around
norm.
where it should
And
be.
that's around like a stable market where buyers
Right.
have the ability to go back home, sleep, maybe take the weekend, maybe talk to their relatives, maybe book a second showing and take their parents to see the house. They can insert conditions in the offer. They can go through their regular due diligence and their regular decision-making period when they're buying a house. It's a stable market. So I like the fact that the days on the market is going up. And as a professional, we have to be very vigilant of that, right? And I think there's a lot of realtors out there that if they don't have a showing in the first like 5 days, like, oh my God, something's wrong. They panic, we have to adjust the price. We have to do this. No, as long as you've listed the house at the correct price at market value, I encourage realtors to list slightly below market value to encourage a little bit more showings and, to get people through the door. But as long as you've done that, then my message to you is wait, be patient, right? Because the market has to take its toll. And, the days where things have sold right away, those days are gone, right? So as a professional, you have to set expectations. You can't rush. You can't be impulsive in making decisions. You can't be reactive. You have to have a pricing strategy. You got to set that pricing strategy in motion, execute, and then be patient, knowing that the average day on the market is in that 35 to 42 range, right? Once you get to that average day on the market, then it's time to start making some decisions, pivoting and adjusting your listing strategy.
Right. And that's, from my point of view, that's the proper advice that agents should be giving their clients. Now, we know there are some agents that are not doing that. And they're saying, oh, no, give it to me. I'm going to get this sold in a week. And I'm the best agent around. And I got this. And, and they're telling them, they're misinforming them and mismanaging their client's expectation by telling them those things in order to try and get the listing.
Yeah.
Okay. And in the long term, that's going to come back and bite them, because it's going to hurt their reputation in the long term. Because they're going to have an unhappy client, because that's what their expectations are. Because, maybe they get lucky, but chances are they're not going to get lucky, and it's not going to be a week, and it's going to take 42 days or something close to it. And then go through that process. And it's like, well, you told me you do this, and you told me you do that. And that's not good, because even though that property eventually sell with that agent, that client's not going to be happy at the end of the day, probably not going to get the price they want, not going to get the timing they want. And when they go have a conversation about their experience with their friends and relatives, what are they telling them?
Yeah.
My agent, he was just trying to get a listing and gave me a bunch of bullshit. And, and I listened to him, and he should have known better, because for what I've learned now is that wasn't reality. That was my agent just trying to get a listing. Right. Yeah. So it's not worth it. Like, if you're an agent, like, you're in it for the long haul, you're not in it for the short term. As hungry as everybody might be to get a deal done, you shouldn't play that game. It's just not good.
Yeah, you use the word experience, and we've been focusing a lot on that word lately here at Sutton Summit, because I think the client experience is the most influential factor they have control over. You can't control the market. What happens to the market? I mean, you can react, you can price correctly, right? But the experience, the client experience, is what you have ultimate control over, right? So make sure you communicate, make sure you set expectation, make sure you go above and beyond, and you make that seller or that buyer experience as best as it can possibly be, because that's what you have ultimate control over. And I think that's what you need to be focusing on. You can't control the market. All you can do is communicate and set expectations, right? And make sure you have the best product that you bring to the market. It's staged, it's painted, it smells well, it's presented well, you have great marketing, you have great exposure, it's priced properly. Once you do that, then focus on the customer experience. Make sure you communicate, make sure you have that cradle and that nurturing support system for your clients. Make sure they know exactly what's going on after everything that happens. The minute a showing is over, make sure you call that buyer agent and pass that feedback, good or bad, onto your seller, because they need to know. Right. And if you do all those things and you have the right pricing strategy and you set the right expectations and you really focus on the customer experience, it's going to result in that positive situation, whether the property sells or not. And hopefully, if you've done all the right things, it will sell. And the probabilities are you're one of those successful transactions is much higher.
Yeah, and so much of it is managing expectations, and it's part of being a professional. Okay, and we talk about managing the client's expectations. We also have to manage the real estate agent's expectations too, to understand the marketplace and understand, what's real. And like the point you made before, the days on the market, and the norm is more in the 35 to 42 day range. We've just gone through a period that's a lot of agents out there and a lot of consumers out there don't realize that we were in such an abnormal market. And that's all they were hearing about and reading about for 2 or 3 years, or maybe longer than that already. So now we're getting back to a more normal market. If you remember that podcast we did with the economist from CoStar,
Mm-hmm.
and we were talking then about interest rates, and we were trying to, well, what's the norm, right? Because we had these 2% interest rates for so long, and that was part of the same discussion. You manage expectation. He said, no, the rates might keep going up even until the summer, and we might get to, he doesn't think it'd get to double digits, but it's potentially it could, but it's going to come back down at some point, maybe late spring, summer, even before it is now, but it'll settle somewhere 4 to 8%. Remember that? Yep. He said that's really what the normal range should be. So sometimes it's closer to 4%, sometimes closer to 8%, but it's never going to be at 2%. So don't expect it ever to go to 2% unless there's some, it's an abnormality. If it happens again, 10 years from now, it'll be an abnormality, but most of the time it's going to be more in the 4 to 6% range. Same thing is days on the market. Most of the time it's going to be 5-6 weeks on the market. That's where in a normal market, that's where things should be. So we all got to get back to understanding that and accepting that. Agents have to accept that, understand that, and manage the expectations of their clients too. This is where interest rates are going to be. Might come down a little bit, but if you're waiting for it to come down to 2%, you're never going to buy a property. May never happen. Will it fluctuate, come down from, if it goes up to 8%, will it come down to 6%? Maybe, but you got to plan it that you're going to buy something in the 6 to 8% range. What can you afford if it's 8%? What can you afford if it's 6%? If you get lucky and it comes down back to 5 point something, great, that's gravy, but don't plan your life based on that, because you'll be waiting forever, right? You'll never buy, you'll never sell.
So here's $1 million question, David. What is the Bank of Canada going to do on January the 25th, I think it is, when they make their next interest rate announcement? And let me just verify that, because people are throwing around different dates between the 24th and 26th, but I know it's at the end of January. It's coming up. Let me take a look.
What's your best guess?
I take a look at the inflation indicators, and inflation went from a high of 8.1% in June of 2020, and this is according to their website. I'm on it right now. In July, it was 7.6. In August, it dropped to 7. And then, we were at 6.8 when they made the last interest rate announcement. And then as of yesterday, December of 2022, they just updated the website, and the inflation dropped to 6.3%. So we are definitely trending in the right direction. Question is, are we moving there quickly enough? Because remember, their target rate is that 2 to 4%. So are we moving? Sorry, 1 to 3% is their target rate. My apologies. So are we moving towards that 3% fast enough for their liking? And I don't think we are. I think 6.3 I think that's still well outside of the norm. I think we're going to see another interest rate increase.
Yeah, I wouldn't be surprised if it goes up again. I don't know how much up it'll go in one shot. They might do a little bit and do another one a month from now. But it's, I don't know. Based on what the economist told us back then, he said, the trend is he thought would still continue upwards in 2023 for a period of time. And then it would probably start to come back down a little bit if the other factors indicate that we're a little more under control, right? So, what do I know to compare to, what his thoughts are. So that's why I'm thinking, even if it goes down a little bit right now, I think a month and I might go right back up, because I think there'll still be a bit of an upward creep, not big steps, but I think it might still continue to go up a little bit before it starts to really come down. But that doesn't mean that people shouldn't be out there, right? Because yes, if you're buying today versus a year ago, your interest rate is more than double probably what it would have been, okay? Because it was artificially low back then. But on the other hand, the house that you're looking to buy is selling for significantly less right now than it would have been a year ago. So when you do the math, you might still be able to afford the same house a year ago, because you're not paying as much for purchase price. You're not putting down as much money. You're not carrying as big a mortgage. So now you're going to carry a slightly less money down, carrying a smaller mortgage to buy the same house, but you're paying more on the mortgage. So the math might be the same, or it might be close, or a lot closer than people might think. So my advice to people is always, make sure you got a good agent, make sure you got a good mortgage broker analyzing this, so you can really figure out what you can afford. And if you really wanted to move for all the reasons you want to move, then still do it. You can still find that property. It might take you longer to find it because the inventory is not there, but you should still be looking for it. Because we need people to get out there and do it. So if you're waiting this out, thinking interest rates are coming back down to 2%, like, it's not happening.
I think it's going to be a while before that happens. And look, it's a difficult time. I mean, Christmas just passed, and a lot of the times, people are just getting their visa statements for that time period. And financially, with interest rates rising, and especially those people that have variable mortgages, it's affecting their cash flow in a big way. Right. So I think as an industry, as realtors, as agents, we have to go out there and really be in touch with our clients, communicate, just like we did through COVID. Remember, when we first started the podcast, David, our message was so similar. Be that center of support for your clients. Reach out to them, even if you're the reason why they're in a mess, why they bought a house. You should reach out to them even more so, right? And go see them and go talk to them and explain the real estate cycle and tell them that, interest rates are temporary. They're not going to be here for, the next 10 years. Maybe we're going to see higher rates for 6 months to a year to 2 years, but eventually they are going to start coming down. And as inflation adjusts, and we see clearly that we're on a downward trend, we're going from 8%, we're sliding down, we're at 6.3%. We need to get to that 3% baseline, but we're working towards it. So it's not going to be permanent. These higher interest rate environment is not going to be with us forever. It's temporary. And I think, focusing on price is much more important than focusing on the interest rates, because the rates are going to change. They're going to vary. They're going to, they're not going to be with us forever. Right. And especially right now, we're talking to a lot of investors at the office, and we're seeing negative cash flow on some of these properties, especially for the investors that, don't have a lot of cash on hand and they want a mortgage to buy some of these properties. We're seeing negative cash flow. But again, there's 8 profit centers when you buy real estate. Cash flow is just one of them, right? So maybe you have to sacrifice cash flow for the next 6 to 9 to 12 months, but maybe you're going to find the right property. right? So
Right.
there are opportunities out there. You do need to consult and be in touch with a professional to really understand what's happening, and so they can help you navigate. But the other thing I wanted to say, David, and this has been on my mind for the majority of this podcast, is when we started talking about conditions at the beginning. Right now, as a professional, as a realtor, you should not be encouraging anybody to waive financing condition on any offer without the direct input of a mortgage broker or their financial institution. It's too unstable out there. And even, to those people that are 100% sure, oh, I know what my finances are. You know what? The landscape is changing so quickly that as a professional, you should be encouraging every single one of your clients to really consult their mortgage professional before making that decision. And I would actually go a step further than that. I would actually be, as a professional, be sending out an email and including them in the email thread and getting them to give you permission to waive the condition before actually going ahead and doing. You have to cross-check, I think, in this market. And the idea here is that you have to safeguard your client every step of the way, so they're not in a situation like you've described where, they have a closing and they don't qualify, they can't close, and they just bought themselves a lawsuit.
Yeah, I think that's excellent advice, David. And the lenders are adjusting their underwriting criteria as we speak. They get a little bit more conservative in what they're going to allow, and they're double checking everything, and they want to make sure that people, their employment is stable. And and don't forget, there's a lot of people that had adjustments there. Some people thought they were going to get raises this year because they worked really hard last year, and they thought they were going to get bonuses, and those didn't materialize, because the economy, fell off so much in the second half of 2022. So, the lenders' underwriting criteria are really important, and mortgage approvals are always subject to a whole bunch of conditions go through this underwriting process. So I think your advice is bang on. You got to be very careful. You got to make sure that you've got it locked down. And in any underwriting condition, any mortgage approval, lenders today really want to see the actual transaction. So it's one thing to pre-approve for a potential purchase of $1 million house somewhere, right? But the lenders, it's always subject. They want to see the actual agreement of purchase and sale. They want to see the actual house. They want to do their own appraisals of it. And the appraisals are no longer going to be these little drive-by appraisals where they, where they waive. They want to go see the properties and have information, because they're nervous about lending money on prices and overvalued prices. And if the deal goes bad and the mortgage payments can't be made, they're concerned about, what are we going to sell the property for? Do we have an ability to recover our money? That's their business. And so that's what they're looking at. They got to look at the downside of it. Yeah, here's your loan. But in the back room, they're trying to figure out, the second that person defaults on it and we got to sell the property, can we recover our loan with all the interest and with the penalties and with the legal fees and with the commissions on the resale, and we sell it under power of sale, and property taxes that are outstanding? They're doing that math all the time, right? So they're trying to figure out, can we recover it if this defaults before they even give you the money? Yeah. So you got to be very careful. Make sure that a mortgage approval is a real mortgage approval, and that you can meet all the underwriting conditions before you waive that condition.
David, are you guys seeing more power of sales?
Yeah, there's more that are going to come up, and power of sales, is a bit of a process too, because it's not like they default and then the next day it's on the market being sold under power of sale. Like, notice has to be given, an opportunity to rectify has to be given. Then if they issue the notice of sale, then there's a 35-day period, which often becomes a 45-day period before they even start to list the property. So we're going to see more and more of it, but there's this time lag until those properties can get to market, but there's more of it. And I've, recently done a couple webinars on power of sale, because on how to deal with it from an agent's point of view, what to look for if you're selling, if you're buying under power of sale, because it's different. So I'm getting more demand for people asking can you come and talk to us about that process. I think I'm going to be doing one for your office in the next coming weeks on that as well, because we're going to see more of it. Like we're starting, it's trending that way. There's more defaults that are happening, and then gradually we're going to get through this, this period, and those properties are going to come to the market. Okay. And when they come to the market, they come to the market. If it happens to be in January and the notice period is up for power of sale, then the lender's going to sell it in January. The lender's not going to listen to the borrower saying, oh, please don't sell it in January. Please wait until April because the market will be better and you'll get more money. Lender doesn't have to do that. Lender's going to sell it as soon as that notice period is over in whatever market happens to be there. Okay. They have to try and sell it for fair market price, but it's whenever the market is. They're never going to list a borrower. So, oh, I think the market's going to be better in the spring, so let's, sell my property in the spring. No, lender's going to sell it as soon as that notice period's over, and they'll get as much as they can. And if the lender thinks they're going to not sell it for enough to recover, and they decide they want to sit on it for a couple of months, that's their choice. But they're not listening to the defaulting borrower on that anymore. They've lost control.
Yeah, and look, guys, this is a very serious situation. When you're in that situation, unfortunately, the law is not on your side, and the courts have ruled consistently in these cases where the money's owed, it's black and white, you have to pay. There's a process, and unfortunately, that process is going to be carried out, right? So, you make those tough decisions before you even get close to that process. Cut your spending. Take a look at your visa statement. Negotiate before you're in default, like way before you're in default. Go negotiate with the bank or the institution that you have the loan with, because there are certain instruments that they could use to assist you. There's interest deferral, there's payment deferrals, there's certain things. Banks are not in the business to take your house. It's bad business for them. They don't want to be in that situation, but they will do whatever it takes to protect their money if you've made no effort to rectify the situation ahead of time, if you haven't been vigilant, if you haven't been transparent, and if you haven't done anything to rectify the situation, right? So the onus is always on the borrower.
Yeah, no, and you're right, Dave. Like the banks are in the business of lending you the money. They want to earn interest on that and fees. That's what they're really relying on. Then they want the money to come back to them at the end of the loan, and then so they can lend it to somebody else. Like that's really their business. So they don't want to necessarily sell the property and go through if they can avoid it. But if a borrower goes into default, there's only one of three things are going to happen. The borrower is either going to refinance it with somebody else.
Yep.
Or with that lender, at a probably more significant cost, if they can do that in order to get money to pay out that mortgage, or they're going to sell the property themselves because that's their plan. I can no longer afford this house or whatever, but I'm going to sell it, and as soon as I sell it, Mr. Lender, I'm going to pay you back all the money that I owe you. But here's my process. So if you're upfront and showing them that it's on the market or that it's listed, it's being sold, they're going to give you time to do that. The third option is if you're doing neither of those, you're not showing the lender there's a plan to refinance that's in the works, or you're in the business or process of selling it, then the lender's going to say, well, then I'm going to sell it because you're not being proactive enough and I don't like your plan. So the only way I'm going to get my money back is for me to sell the property. And then they issue the notice of sale and they go through that process. But one way or the other, the property is either going to be sold or it's going to be refinanced. Like there isn't another option. The lender's not going to let you just sit there in default indefinitely. They'll give you a little bit of rope, and usually they'll cooperate as long as you show them there's a real plan in place. They'll give you some time because they'd rather you sell it than they sell it, as long as you're showing, but they're going to want to see everything. As long as you're showing them that it's real. I got an agent, listed the property, we got showings, here's what we're trying to sell it for. If you're showing them you're listing for a price that you're never going to get, the lender might say, no, like that's not happening. Go ahead and try and sell it, but we're going to go through our process too. And if we sell it before you do, then, that's too bad.
Yeah. But ultimately, there's, I think seeing more power of sales in the market is an indicator of things changing and the market moving. Look, there's going to be less transactions out there. It's going to get more difficult before it gets better, I think, in my opinion. And like we always say, the realtors are going to be rewarded are the ones that put in the hard work, go back to basics, reach out to their clients, communicate with their clients, and try to increase their market share in this market.
Yeah. That's what you got to do. And, power of sale, we'll get into that as a whole other topic, but, it's not always a bargain. Sometimes it's a bargain, but there's a whole bunch of caveats that go with it. I did a blog recently on it, and I've done these webinars lately. So maybe we'll do a podcast just on that again in the near future, because again, like everything else, it's an opportunity if you're buying under power of sales, but it comes with, with other factors that you really have to consider. But if you're the one sitting there with your property being sold under power of sale, that's not a good process to go through.
One of my
lost control.
Friends, one of my really close friends gives second mortgages. And, we talk about fee schedules all the time, he shows me some of those fee schedules that he tags on the mortgages when there's a default happening. And those fee schedules get out of control very, very quickly. Like it's incredible, right? How quickly they rise. Now, some of it is not legal, and the courts have ruled that some of it can't be enforced, but a lot of it is being enforced, and a lot of that money is due and payable. And listen, if you gotta pay all that back, in order to prevent your house from being sold under power of sale. All those bills have to be taken care of ahead of time. So when you're refinancing or you're paying the lender off, you're not only paying the outstanding portion of the loan, you're not only paying the interest owing, but you're paying all the defaulting fees. Every single time there's a letter sent to the other lawyer demanding the money back, it's $250. Right. Every single time, something happens, there's a fine imposed, right? And those fines get out of control, very, very quickly. It's incredible, right? Yeah. He shared a story with me that there was a house and there was construction going on, and they were in default, and I think he got judgment or something like that. But they actually erected a fence around the property so the construction workers can't go in there anymore. And they hired the security company to sit in the front lawn 24/7 to monitor the property. And the whole cost for that whole process, guess who paid it?
Yeah, because they have the right to secure the property. And it gets extremely expensive. Look, we act for a lot of private mortgage lenders, and they're pretty busy these days. And, and they're really needed in the marketplace now. And it's one thing to be a first mortgage lender on properties, but I also know a guy who started as a lawyer, and eventually his practice got into just being a private mortgage lender, doing mostly second mortgages. And he actually is looking for properties that he thinks are going to go into default and lending money with the expectation, when he does the math, they're not going to be able to afford their first mortgage. They're not going to be able to afford the exorbitant lender fees that they're paying up front to him, plus the high interest rate. And there's a real likelihood that this is going to default because he loves it. And because he's got a pool of money, he'll keep the first mortgage in good standing. So he won't let the first mortgagee sell the property, even if they go in default in the first mortgage. The second mortgagee has the right to make the first mortgage payments, keep that in good standing. And but they're in default on the second mortgage. So that gives him control of selling the property. And sometimes he may not sell it at a price that he's going to recover all his principal because the market may have gone down or whatever. But he's added so many fees and penalties and other interest costs to it that he makes a great living doing it. And he's ruthless. Like, he's never going to give the borrower the time of day. Once he gets his teeth into it, goodbye. He's got control of the process, and he's going to sell it. And he'll sell it, best price he could do. He knows the process. He's going to list it. He's going to expose it to the market. But what he, the amount of penalties and interest costs and all those other costs, like you're talking about, David, securing the property, getting possession of the property, getting into court to get a possession, the legal fees involved and all that. Man, it's amazing how the equity disappears. Whatever equity there could have been from the homeowner, just gone.
You have to be so careful, but it's not a joke. It's a real problem. And I don't wish anybody to be in that situation, but I think we, David, as professionals in this industry, we have to educate people, right, of what the ups and the downs are of making certain decisions. Because that's how we're going to better the industry. I don't want people like this to thrive, and to make their living preying on people who, a lot of the times need help and don't realize, what the end result's going to be, right? But I think through education and it starts with educating everybody in the industry, we're going to make a difference, and that's why we're doing these podcasts and having these conversations every Wednesday at 9 a.m. in the morning.
Yeah, and look, we always try and bring the conversation back to some extent to us just being business owners, owner of a brokerage, owner of a law firm, and how we run our own businesses. Like we have significant challenges like any other business owner right now too. And I don't know about you, David, but every expense that we're incurring, like everything's gone up in price.
Yeah.
Right. So, we try and keep our fees at a certain level, but all of a sudden our expenses have gone up by these inflationary factors because our suppliers have increased their rates. And our employees still like to get raises and bonuses and things like that. And we got great people that I'd love to keep giving raises and bonuses to.
Well, their life has gone up in value too, right? Like if you think about one of your staff commuting to work and putting gas in their car and going out and buying lunch, all those things have gone up in value. So, again, as a society, we're all part of that issue, right?
Right.
And there's no easy way to really rectify it. And the easiest way is to throw more money at it. But that's also contributing to the problem at large. And David, do you remember? I don't know if you remember in the 80s, there was that commercial, "Stay fit and eat well," or they were on TV all the time about exercising and living like a really healthy, balanced diet.
Yeah.
I'd love to see the government do something like that about financial literacy for people, right? Because without that component, without everybody doing their part, it's going to be really tough to really control inflation and really get people to change their habitual habits of spending less money out there.
Yeah, well, spending less money, but then because we're in the real estate industry, we want them to spend the big ticket items.
Well,
right.
Of course.
So that, that's a hard thing to do. And look, anybody that's on a variable mortgage is actually spending more money than they were before, right? Even if all the rest of their habits are exactly the same, they go out for dinner just as often as they did a year ago, and they're not changing other spending habits. All of a sudden, their spending habit has been changed for them because their interest rate has gone up so much because they're on a variable rate interest. So they've got less money to spend at the end of the day, right? And then everybody, wants to get a raise, wants to improve. They're working hard, and sometimes it might be justifiable, but right now it's hard for employers to do that, at the same time, because the revenue is just not going to be there, because the revenue drops and the expenses, their supply expenses have gone up. Right. So it puts a lot of pressure on business owners, on all of us. How do you adjust for that? How do you make the right decisions you want people to be kept happy? And I have a couple of people in our office came to us a little while and said, we want to continue working from home because we saved our commute time and the cost of gas and the wear and tear in our vehicle. So we can actually save money if we can work from home. And I've shown you I can get the job done from home, so we still work remotely a couple days a week and and, and things like that. And so, we listen to that and go, I get that. That makes sense. So we agree and we allow them to do that. And then all of a sudden, we come to year and says, oh, by the way, we still want to raise, because even though we're saving that money and saving expense, we still want to raise. We still have other inflationary factors that are hitting us, and we've been with you a long time, and we would still like a raise. And and they work hard. They're good people. They're doing their job. We'd love to give them a raise. So we try to where we can, but then, how do you do that as a business owner when all your expenses go up and your revenues are going down?
It's really tough, but I think you need to have those tough conversations. You can't wing them. You can't just brush them under the carpet. You need to be very transparent with your team and, share numbers, share information of where your company is today compared to where it was last year in terms of, how many deals are coming through, how many phone calls are coming in, right? Because numbers don't lie, and you can build and have those tough conversations surrounding what is the outlook of the business looking like when you look at statistical figures that you can't argue with, right? And I think that's where all these conversations need to start. And we need to, as business owners, we are all business owners, we're all entrepreneurs, we need to start having tough conversations with ourselves first. The first tough conversation needs to be with yourself. What is the health, what is the state of your business today, right? And how can you change it? And again, look for that gas pedal and make sure you press it in the right places and in the right instances, right? You need to keep growing your business and working on your business as opposed to working in your business. And you need to expand and invest in the right area so you have continued growth and you expand your market share in certain areas. But it's tough, but it starts with you. And it's going to be a tough year. I think 2023 is going to be a tough year for a lot of people, for a lot of business owners. But I think it's also going to be a year of incredible opportunity for the ones that do the right things, for the ones that, have those tough conversations with themselves and with everybody around them and seize opportunities.
Yeah, and it's exactly the way we started the conversation. We can end it the same way. It's turning these challenges into opportunities as opposed to just sitting back and waiting. That's not a good strategy. You've got to come up with some other strategy to try and get through this. And I'm always comforted by the fact that, our business is so cyclical and the market is cyclical. So it will come back. It will improve. There's no question about that. The question is the timing of that. Is it going to be like it is every January, that we're quiet in January, a little bit busier in February, a little bit busier in March, and then by April there's a spring market and away we go, right? To the point where everybody's overloaded by the time we get to the summer. Is that going to happen again? It might, or it might just happen it'll happen to some extent for sure. I know for a fact we're going to do more closings in April and May this year than we are in January and February. That's going to happen. The question is how much more, right? How much of a rebound will there be? Because there will be some. There's always going to be improvement in the market conditions just by virtue of the weather changing. We get into spring. And
we're seeing the demand from buyers. Like there's clearly demand from buyers. There's just no inventory, right? So right. I mean, that standoff. The sellers have to accept the market that we're in,
right?
And be comfortable with lower prices on their homes moving forward. And I think when that happens, we're going to start seeing more transaction. And I think as the debt becomes more expensive and it's harder for the sellers to sit still and be in lingo, I think we are going to start seeing more transactions happening, right? And when the market changes, whether it's up or down, it's never a bad thing for real estate professionals because then the volume of transactions starts increasing, right? And that's the one thing we need to see is we need to start seeing more transactions in this market.
Right. And the good agents are explaining to the potential sellers that as long as you're selling and then buying in the same market, you're not losing out. because yes, you're going to be selling for a little bit more than the number that you had in the back of your head, which is yesterday's number. Like that's last year, that's gone, right? So you manage that expectation. But the good news is you're buying in the same market. So the property that you're going to buy, as soon as you sell, the property you're going to ultimately buy is going to be at a different price than it would have been a year ago too. So if you're selling and buying in the same market, you're not losing anything, right? And you can't say, well, and you can't do it, sell, and then 3 years later look back and say, oh, if I would have only waited 3 years, I would have sold it for, like, who cares? Like that's always going to happen. That's always going to happen, right? So you got to get people off even thinking in those terms. Today's the market. Analyze the market today. Make your best deal today, and you won't lose in the long term.
And there you have it, everybody. The sky, in fact, is not falling.
It's not falling. We have a conclusion.
What a great way to end the podcast, David. It's so funny. You blink and an hour goes by, but great topic today. I think people needed to hear this. Lots of moving variables, but again, back to basics, do the hard work. And if you sell in the same market, you buy in the same market, as long as you have the right professional on your side, sky is not falling. And, you're going to be in the same status or in the same place that you were when all this started. So
Yeah.
real estate is still a great investment. There's tons of demand out there. Sellers, it is a good time to list and to try the market, just because there's no inventory out there, right? So call your realtors if you guys want to make a move. David Korman and myself, we're always available. Happy to take your questions. And I guess next week we're going to segment into power of sales.
All right. We'll be ready for it. There's things that you have to consider no matter which side of the transaction you're on. So anyways, it'll be a good topic, good discussion for next week.
I look forward to it. Thanks so much, David.
Okay. Always a pleasure, David.
All right. Take care, everybody.